Hey everyone, Steve here from My Crypto World. Welcome back to this next episode and cryptocurrency stories that we're going to cover off in the market today. So we've got three stories today for you. The first one is regarding Solana and it's reaching new milestones. We're going to have a look at Polygon Matic and see what's going on with the pricing. And we're also going to talk about an article that came out about how blockchain could actually affect the real estate market. All that after this. Okay, so we've got three articles to go through. So let's hit the first one, and it's all about Solana. So it goes on to say that amid crypto market bearish turmoil, which we're all going through at the moment, Solana's active validator count has reached an impressive figure of 1,875 recently. This goes on to show how the blockchain is far more secured and decentralized than others in the crypto industry. What's more impressive is that Solana touched a count of 1,000 active validators just over a year ago. Now, for those that were around a year ago watching this channel, I did post an article about that. This means that Solana now has the most active validators among all proof-of-stake blockchains, besides Ethereum, which has 8,417 nodes and 409,000 validators. Interestingly, the validator count on Solana has increased massively since the launch of the mainnet beta. However, there is pressing concern, the article goes on to say, that among some Solana validators in their geodiversity, almost half of the validators are located in the US and Germany. Now, this is really important for me because I've never thought about this before, to be honest with you. It didn't even cross my mind. And according to a blog on Masari, if too many validators are concentrated in the same places, the health of the blockchain becomes reliant on the regulatory regimes of those countries. Another important aspect of a healthy blockchain is the distribution of staked tokens among those validators. It comes in a Nanamoku coefficient, which is defined as the smallest number of validators who cumulatively stake 33% of the network's staked tokens. A higher coefficient value would mean higher distribution of staked tokens, hence this represents a higher degree of decentralization. So again, I love articles that come out and teach me something or make me think in a different way. And there are a lot of validators on a lot of different networks, and I've never really considered how well spread they are across the globe. Look, I believe, and I've spoken about it before, that the Theta network is probably one of the best validators or node networks within the market at the moment. It's certainly got a lot stronger global adoption and is widely used throughout the world. But I never really looked into exactly where they were, where are the nodes, where is everything happening, and it's very true. So if you've got more people in the US or Germany or Australia or doesn't matter where, the Philippines, and you've got a central hub of nodes and validators or proof of stake offering in those countries, you absolutely will be defined by the metrics of that company, that country, and the regulations that goes with it. So again, decentralization is all about more power to the people, but we have to be decentralized across multiple countries for that to really be effective. Now, that's not a bad article at all. Some people would read that and think, well, Solana's dead in the water. They haven't spread themselves out far enough, but you've got to start somewhere. So it's just an interesting point, and I would suspect that there'd be a lot more coins out there and projects out there who are worse off than Solana. So just a different way of thinking anyway. The second article is regarding to Polygon Matic. And it's just talking about, will it reach $100 in the future? Now, again, I've covered Polygon Matic off a number of times on this channel, but I thought this was interesting because it sort of makes you question, am I going to be in this for the long term? For those people who know, I'm very much a long-term holder and investor, so you're talking 5+ years for most of my investments. But there are other people on the channel as well who watch this who are more of a trader. So this might give you insight into what might be better for you short and long term. The article goes on to say that Polygon is a blockchain network, for those that don't know, that represent a scaling solution for Ethereum. And you've all heard me bitch on about how expensive Ethereum fees are. So this gives you some context to what Polygon does. Polygon aims to enable faster and cheaper Ethereum transactions. It uses layer 2 sidechains, which can better distribute the high transaction load across different chains. The network token is called Matic. It's used to pay transaction fees and participate in proof-of-stake the consensus mechanism. Matic was also the former name of the Polygon network. In the future, Polygon wants to become its own multi-chain network. Polygon describes itself as Ethereum's Internet of Blockchains. So we just scroll down a little bit. I'll link the article below for anyone who wants to read the whole thing. It's actually a fairly short article, so I haven't highlighted too much about this, but the article goes on to say the entire market has been able to recover somewhat in recent weeks. Polygon's price did the same. In fact, the Matic price has risen the most in recent weeks. It went from 35 cents to 95 cents, which means that Polygon's price has almost tripled in the last 2 weeks. The reasons for the increase in Polygon can be explained, among other things, by cooperation with well-known companies. After successful cooperation with Coca-Cola, Polygon recently announced a cooperation with Disney. Polygon is the only blockchain considered by this company. So that's pretty powerful. Furthermore, the use of Polygon in the area of non-fungible tokens is increasing. Cooperations with Adidas and the payment service provider Stripe are also known. The number of new projects on Polygon network also continues to rise sharply. But can Polygon reach $100? And this is where the article's really leading to. Polygon has the advantage of being part of a massive Ethereum ecosystem. Furthermore, Polygon is developing towards a multi-chain platform that can operate independently of Ethereum. So while it wants to work with Ethereum, it also wants to have its own standalone space. It wants to be independent. Polygon's potential is therefore huge, and the price should rise again massively in the next bull run. A price of $10 in the next bull market seems very possible. If we wait for another cycle, $100 for Polygon Matic rate is not at all unrealistic. So again, depending if you're a trader or an investor, somebody who wants to swing trade, get in and out, make as much profit as you can on the way up, pay your taxes and all that sort of stuff you've got to do and do, or whether you're more like me, a bit more of a relaxed investor and you just want to take the long road and not worry too much about the day-to-day intricacies of intraday trading or interweekly trading. I've often found that if you're a really good trader, a short-term trader, you can make a great deal of money. And if you're a really good long-term investor, you can also make a really good amount of money. And at the end of the day, it probably isn't going to vary that much, to be honest with you, in my professional opinion. I've traded the SPY and the spot and used to be up at 2 or 3 a.m. in the morning trading currencies overseas. And I felt that I made as much money, if maybe a little bit less as an investor, but I had a lot more time available to me. So again, it just depends on who you are as an individual. There is certainly a thrill that comes from intraday trading, that's for sure. The final article, which I thought was incredibly well written, it's really long, so I'm not going to, I will again link it in the description, but we're just going to cover off the main points of this. And it's talking about how blockchain technology can transform the real estate market, not the metaverse, not the fake real estate market, but the real world market that we all live in and we've got all our homes and stuff in. So interesting to read. So let's have a quick skip through this article before we finish up. Property is the world's single largest store of wealth, and if the cryptocurrency and blockchain world is seeking an express route to mass adoption, it could do worse than partnering with the real estate industry. According to a September 2021 report, the estimated value of all the world's real estate stands at $326 trillion. By comparison, the crypto sector market capitalization is about $1 trillion, as it is now. The article goes on to say its fees are high. This is relating back to not the cryptocurrency, but the real market, property market. Its fees are high, the paperwork is onerous, and the deeds are sometimes defective, falsified, or missing. Some properties can take years to move. Another way of saying is the market is illiquid. All in all, it isn't surprising that many believe the market is ripe for disruption, particularly through blockchain-enabled tokenization. This notion of tokenizing real estate isn't entirely new. Back in 2019, for example, a €6.5 million villa just outside of Paris was tokenized, and 1 million shares were put up for sale on the Ethereum blockchain. The first property in France ever sold as a blockchain transaction. An individual could have purchased part of the luxury villa for as little as 6.5 euros. Now, Web3 is all about ownership, owning fractionalized shares, says Bobby Singh, the founder of Nifty Sky. Imagine fractionalizing the Empire State Building into 2 billion shares. An individual could own a piece of the Empire State Building for several dollars. Ownership creates its own momentum, and this is where the benefit comes in of multiple owners of one building or a particular site, or multiple owners owning maybe the Mona Lisa or some, the Great Wall of China, or what else is there? The Empire State Building, as the article said. Ownership creates its own momentum. If you become a collector and an owner, you're more likely to talk about it. More owners mean more excitement, and the concept of title becomes very important. If one accepts the numbers of the real estate market of the 300 and something odd trillion dollars worth of real estate, the world's real estate is worth more than 300 times the size of the crypto and blockchain sector, which recently slumped to below 1 trillion. That's true, but we're up above $1 trillion now in market capitalization. That disparity hasn't been lost on the observers. Even if just 0.5%, so 0.5% of the total 280 trillion global property market were tokenized in the next 5 years, it would become a $1.4 trillion market. Alternatively, if one uses the estimate of $327 trillion market and only 1% of the global real estate market were tokenized, it would triple the current market cap of the entire cryptocurrency world. So pretty powerful there. So aside from all the projects that's happening in the crypto space at the moment, on multiple different blockchains, on different layers, we've also got the real adoption that could, it's going to happen at some point in time, where the real verse, the where we live now, is going to merge properly with the cryptocurrency space. I think to begin with, most of that will happen. That merge will happen through NFTs. NFTs, as I've said before, don't just have to be artwork. They can be receipts. They can be blockchain ledgers of property transactions or banking transactions. The benefit of that is it can't be falsified. It's on the network. It's on a number of different nodes throughout the world, probably hundreds, if not tens of thousands by the time it actually goes live or becomes mass adopted. So there are a lot of benefits to that, and it would absolutely increase the value of the cryptocurrency space as it is at the moment. Anyway, that's it for this week's articles. We'll see you in a few days' time when we go through what's been happening in the market itself. We'll be going through the market cycles and having a look at particular cryptocurrencies individually as well. If you like the content, please hit like, and if you want to, you can subscribe. If you don't like the articles that I'm talking about or this content, just put a comment below and let me know what you'd like to see on the channel, and I'll try and get that to happen. Until we see you next time, take care of yourselves and each other. Cheers.